Time for our 360 round. We're previewing Meta Platforms and Microsoft earnings, which come after the bell today. Let's bring in our panel to dive into it. We've got Jason Ware, Chief Investment Officer, Head of Research, Albion Financial Group, and Skyler Weinand, Chief Investment Officer, Regan Capital. Thank you both for joining us. Skyler, I want to get your thoughts first in terms of expectations for today. And what the street is looking for, consensus for Microsoft for them to report $68.4 billion in revenue. Meta's expected to bring in more than $41 billion in revenue. What's your expectation for both of them?
Yeah, we're in line with that, if not a little bit higher. The tariff effects that have yet to really come about in full froth, especially for these two that are really reliant on ads, it hasn't come yet. And so we're going to see another blowout quarter on top of last quarter's blowout quarter. Would I be buying today? I'm not really sure. I might wait until after the announcement and see what the effect is, because I think most of the effect might be to the downside, like a lot of earnings calls we've seen recently, where it's not so much what happened in the last quarter, but what are we projecting going forward. So that's what I'm looking for is more so the conference call as opposed to the actual numbers.
That makes a great point. I mean, guidance really matters. At the beginning of this cycle of earnings, we were wondering what the guidance landscape was going to be. We get varying approaches to it this cycle. Some are pulling guidance, some are giving worst case, best case scenario. Jason, what's your expectation for both of these companies today?
Well, I think these are secular growth businesses. And what that means is that they can largely grind through ebbs and flows in the business cycle. It doesn't mean that they're not impacted. I think Meta with digital advertising is certainly going to see some downward pressure as the economy slows, and indeed the economy is slowing. And look, Meta is like 98% digital advertising. Some analysts want to take a read through from Google last week, and look, we own Google, good company, like it long term. Google had good numbers, but Google also has cloud. Google also has YouTube. Google also has other things going on that Meta doesn't. So Meta is going to be more of a pure play, a weather vane on what's happening with digital advertising. And I largely agree that I think the last quarter looks pretty good. They've beat 7 consecutive quarters on both revenues and earnings, and we expect another beat. But the big question is going to be, what does Zuckerberg see out of the windshield, not the rearview mirror? And of course, that CapEx number is going to be pretty big. So that's Meta. And then Microsoft is a little more stable, although there have been some challenges with their relationship with OpenAI. So Azure Cloud is going to be a big number to watch.
That makes sense. The Azure will be a big number to watch there. Skyler, I want to get your thoughts. I think Jason brings up a great point about what are the cues we can get from how Alphabet, Google performed. They increased their dividend. They announced that $70 billion in buyback. Skyler, what are you thinking about what that signals for these other two mega cap tech companies?
Yeah, generally, I feel like the bond market's been wagging the equity market's tail this month. Bonds sold off, equity sold off, bonds rallied, 10 years back to 417. That's a big part of the reason why tech in the Mag 7 have been doing well, at least in the last 10 days or so. There's one thing to think about that the market's really not even conceptualizing at all. The U.S. is a pretty decent exporter of services. These are both service businesses. Okay, Facebook, Microsoft, service businesses, licenses, advertising, et cetera. What if the administration comes out and says, hey, we're going to start tariffing services. We're going to start tariffing Spotify because Spotify is a Scandinavian company. So think about that and think about what downside might come from potential tariffs on Microsoft Excel or on Instagram ads from international economies.
Okay, I can't see that happening, but you never know. Look, you never know what will come out of the Trump administration. That is an administration that keeps us on our toes. But Jason, this is, I think, a what if that we can, essentially kind of factor in antitrust headwinds. When it comes to any of these in the tech names, you have this antitrust suit for Meta as a potential headwind. Microsoft had to deal with these similar regulatory issues before. How do you interpret that and how much of a challenge it could be?
Yeah, Diane, great question. And look, the way that we look at the regulatory regime is that it's gotten a little bit better than the prior administration, but not a lot better. That said, all of these mega cap tech CEOs went to the inauguration, they donated to the cause, And so they're constantly in front of Trump and his team and trying to soften things. And look, with regards to Meta on FTC, 2 points I would make. Number one, the stock, like Google, is sort of discounting a fair amount of uncertainty and perhaps even some fines or something worse coming out of FTC when you look at a 21 forward multiple on Meta and 16 for Google. So that's point number one. Point number two is I think there's a settlement to come. I mean, the Wall Street Journal recently reported that Zuckerberg threw out like a $450 million lowball number. FTC came back at 30 billion. Zuck went to 1 billion. They came back at 18. So I think they're going to meet somewhere in the middle. I don't know if it's 10 or 15. Maybe it's that 18 number, but I think they're going to buy their way out of it, and we're not going to see a major breakup. And if that's the case, then the multiple can re-rate a bit higher.
All right. Well, we will certainly be paying attention to Jay with their earnings release after the bell. Thank you both. That's Jason Ware and Skyler Weinand with insight on Meta and Microsoft due after the bell.